The unthinkable just happened. After a wave of aggressive economic policies, Donald Trump has triggered the collapse of the U.S. economy, and the world is watching the fallout in real time. But the biggest shock didn't come from Wall Street. It came from Beijing. In a bold, calculated response, China is canceling key exports to the U.S., halting trade routes, and fast-tracking its campaign to destroy dollar dominance. What began as a trade war has turned into economic warfare, and the U.S. may have just lost its upper hand. Markets are spiraling, allies are distancing, and for the first time in decades, the dollar's role as the world's financial king is under serious threat. This isn't just a downturn, it's a global power shift. Following Donald Trump's return to the White House, his administration launched a wave of aggressive economic measures, including sweeping tariffs on Chinese goods, the dismantling of climate trade agreements, and strict export controls on tech components. The goal? Bring manufacturing back to America and punish what he called economic enemies. But China didn't flinch. Instead, it responded with surgical precision, canceling key exports to the U.S., including rare earth minerals, lithium components, and EV batteries. Beijing also announced the acceleration of its de-dollarization strategy, switching major trade contracts to digital yuan and gold-backed exchanges. Within 48 hours of China's announcement, U.S. markets dropped sharply. The Dow slid over 2,000 points. The dollar lost 3% against a basket of currencies. Energy prices spiked as China halted LNG contracts. And whispers began to spread. Has China just declared an economic Cold War? But this wasn't just about retaliation. It was about leverage. By canceling exports, China hit industries where the U.S. is weakest: high-tech manufacturing, green energy, and electric transportation. And by undermining the dollar, China is going after America's deepest source of power: its control over global finance. The roots of this crisis were planted long before the collapse. Throughout his political career, Donald Trump made economic nationalism his central theme, calling out China for unfair trade, criticizing global institutions, and promising to bring industry back to America. During his first term, this meant trade wars and tariffs. But in 2025, his second term took things even further. Within weeks of taking office, Trump reimposed blanket tariffs on Chinese imports, restricted outbound investments, and pulled the U.S. out of several multilateral trade frameworks. His administration also targeted Chinese companies operating in the U.S., ordering investigations, freezing licenses, and escalating sanctions under the banner of economic sovereignty. Initially, markets reacted with optimism, until China hit back. What Trump failed to account for was how deeply interconnected global supply chains had become, and how much U.S. industries relied on Chinese exports for everything from EV batteries and medical components to telecom parts and semiconductors. Instead of sparking a manufacturing revival, his policies accelerated inflation, triggered supply shortages, and sent investor confidence plummeting. In trying to isolate China, Trump inadvertently exposed how vulnerable America's economy had become without it, and Beijing wasted no time exploiting that opening. The economic fallout was swift and brutal. Within days of China's export cancellations and de-dollarization push, U.S. supply chains began to fracture. Tech manufacturers couldn't access critical components. EV production lines halted due to battery shortages. Prices of consumer electronics surged as inventories dried up. Wall Street went into panic mode. The Dow and Nasdaq saw their sharpest weekly decline since the 2020 pandemic. Bank stocks were hammered as credit conditions tightened, and foreign investors began dumping U.S. treasuries at record pace. The Federal Reserve was forced into emergency meetings as the dollar slipped further on global currency markets. Meanwhile, inflation, which had shown signs of stabilizing, roared back with a vengeance. Fuel costs jumped, food prices spiked, and nationwide protests began erupting in key industrial states as factory layoffs spread. Even major retailers like Walmart and Target issued public warnings, citing delayed shipments and pricing shocks. For middle-class Americans, the effects became visible fast. Fewer jobs, shrinking savings, and rising costs of living. In just a matter of weeks, what began as a political strategy turned into an economic freefall, with the U.S. no longer steering the wheel but bracing for impact. China's response wasn't loud, it was lethal. Instead of shouting on the world stage, Beijing executed a quiet but devastating counter-strategy that hit the U.S. where it hurt the most. First, China canceled long-term export contracts for rare earth elements, lithium, and advanced battery tech, materials the U.S. cannot easily replace. Then, it imposed new licensing delays on American firms operating in China, while fast-tracking deals with BRICS members and Southeast Asian partners to reroute trade. But the real game-changer? Beijing's decision to drop the U.S. dollar from major energy and raw materials contracts. China's state-run oil giants began settling deals in digital yuan and gold-backed instruments. Several countries, including Saudi Arabia, Brazil, and Indonesia, joined in. This de-dollarization move triggered a global market realignment, with emerging economies pivoting toward China's financial infrastructure. The dollar's share in global reserves took an immediate hit, while demand for the digital yuan surged across Asia and Africa. It wasn't just a trade countermeasure, it was a strategic decoupling. While the U.S. relied on policy announcements, China reshaped the playing field. The result? Washington launched a tariff war, Beijing launched a financial revolution. The dollar has long been America's greatest weapon, a symbol of global trust, stability, and control. But after China's countermeasures, that foundation began to crack. As major exporters like Saudi Arabia and Brazil started settling oil and commodity trades in non-dollar currencies, the global demand for U.S. dollars shrank, almost overnight. Central banks in emerging economies began shifting their reserves, dumping treasuries and quietly increasing gold and yuan holdings. The ripple effect spread quickly. Currency markets turned volatile. Investors raced toward safe havens like gold and the Swiss franc. For the first time in 2 decades, the U.S. dollar index dropped below 90, signaling a deep loss of global confidence. Calling this a deep dive, even traditional allies in Europe and Asia began exploring alternative trade settlements, not as a political stance, but a practical hedge against instability. Meanwhile, China's digital yuan, once viewed as experimental, started gaining real-world traction, powering cross-border payments, supply chain finance, and regional trade deals. The shift wasn't just economic, it was psychological. If the dollar was no longer the unquestioned default, then U.S. control over global finance was no longer guaranteed. And that realization changed everything, not just for America, but for the entire world economy. The U.S. government moved quickly, but not fast enough. Treasury officials held emergency press conferences, promising currency stabilization measures and trade renegotiations. The Federal Reserve hinted at interest rate cuts to ease market pressure, but confidence was already eroding. Wall Street remained volatile. Major banks issued internal memos warning of liquidity tightening, and credit default swaps spiked across U.S. debt markets. In cities like Chicago, Detroit, and Houston, once booming with industrial hopes, factories went quiet. As component shortages halted production, public anxiety turned into full-blown panic. Supermarket shelves thinned as import prices surged. Gas prices soared past $7, 0 cents per gallon in some states. Hashtags like "dollar collapse" and "trade crisis 2025" trended across social media. Protesters flooded Capitol Hill, demanding accountability and economic relief. Small businesses, particularly those reliant on international supply chains, began shuttering. Meanwhile, jobless claims surged, and banks began quietly restricting large withdrawals as confidence in the system waned. It wasn't just an economic downturn, it was a crisis of trust. The American public began questioning whether the government had lost control, not just of inflation or trade, but of the future itself. What's happening isn't just a trade dispute or a temporary downturn. It's the unraveling of a global system built over 75 years. Since the end of World War II, the US dollar has been the bedrock of international finance, and American policy has steered the direction of global trade. But today, that era is slipping away, and fast. China's response to Trump's economic aggression wasn't just tactical, it was strategic. For over a decade, Beijing has been building alternatives. The Belt and Road Initiative, its own digital currency, bilateral trade agreements outside the dollar system, and deep ties with energy producers. When the moment came, it simply pulled the trigger. The US, on the other hand, overplayed its hand. It assumed it could act unilaterally without consequence and that the world would fall in line. But instead of isolation, it faces fragmentation. Instead of control, it now sees growing resistance. This moment marks a potential end to the US-led financial order and the rise of a multipolar economic world, with China quietly taking the lead. The question isn't whether America is still powerful. The question is, can it still lead when the world no longer follows? In its effort to reassert dominance, the US may have triggered the very collapse it feared. Trump's economic offensive was meant to protect American strength, but instead, it exposed how fragile that strength had become. China didn't need bombs or battleships. It used exports, reserves, and trade routes. And in doing so, it shook the foundations of a global system built by Washington. The world is watching as the dollar wobbles. Industries freeze, and the American public loses faith. This isn't just about who controls the market. It's about who controls the future. The biggest question now isn't what China will do next. It's whether the US, divided, disrupted, and financially cornered, can recover its balance before the next blow lands. Because in this new age of economic warfare, power belongs to those who can break the system and still walk